That said, we get to our next company, a precision manufacturing company. Aequs reported a strong growth in the third quarter, aided by a very strong showing in the consumer segment, which is a smaller part of their business. The company, however, also saw its losses expand in the quarter gone by, but that was something that they briefly told us about. Mr. Aravind Melligeri, the chairman and CEO of the company, joins us on the show. Hi, Mr. Melligeri. Thanks a lot for joining in and good to see you in. Well, just coming to you in a bit. For the time being, just putting out all the talk points that we want to talk about. Will the growth sustain from here on? What's the outlook on profitability? And the peak margins for the aerospace segment. Well, Mr. Melligeri, good morning. Good to see you in. I recall our chat when you were listing. Let's get a couple of details out of the way. Your larger part of your business, which is your aerospace business, I think you were saying it'll grow at more than 20%. Now it's growing at even faster clip. You want to revise that guidance with regard to the aerospace business and also on the consumer business, smaller part of the business, but you had guided that I think it'll move into the black in the next 18 to around 24 months. That's on course?
Yes. Coming to aerospace continues to grow. It has been growing more than 20%, as you've seen. 38% we had year-on-year growth, and we see a near-term similar level of growth based on the order book of $814 million we have today, order book. And also the EBITDA growth is also showing up significantly more due to the leverage of the aerospace capacity utilization. Our utilization has gone to 71% in India, which is the biggest driver. We intend to take it to 75% in the coming quarter in there, apart from some additional capacity addition also. So we will continue to see the momentum of aerospace growth, and it's a big, significant driver for us in terms of our profitability perspective currently.
Okay, right. And what about the consumer space? Because you had, during the IPO, said that, the utilization is very low. You've signed a lot of agreements and you will be supplying to a lot of toy companies, etc. as well. So where does that utilization stand and by when does that become profitable?
Yeah, in fact, the utilization has improved from year on year. Today, where utilization has gone up to 31% from the last year, up 12% year on year. So that is going to continue to quarter over quarter, and that is what going to be the driver for the profitability. Utilization getting to 50% plus, start seeing the profitability into the consumer segment, and in the coming quarters we will see that happening. And we have productionized on the consumer electronics 2 products which are started shipping in the last quarter, and the ramp up is going to start now and further. And that's going to start contributing to the increased utilization, which is further going to give to the profitability of the business.
So when does that break even? Because currently it's still a bit loss making because of the low utilization. You said it's moved to about 31%, starts to break even post 50%, and then after begins to contribute and become margin accretive. Can you give us a timeline to that?
Yeah, at this point in time, I cannot give the timeline because the reason is the product has been delivered and customer is happy with it. Customer is also asking us to look at potentially increasing the capacity, and that brings an additional dimension than what we originally thought about timelines. So we need to calibrate the utilization increase and then additional capacity bringing on board, because there is a great opportunity for us to scale this fairly quickly to capture the market share. And we need to evaluate those 2 before we can commit on the timeline exactly which quarters we will hit.
Okay, all right, Mr. Melligeri, could you tell us, the impact that you potentially see of the deal India and the EU have got into? Is that a tailwind? Could that provide a big business opportunity for you? Your brief analysis?
Yeah, if you really look at it, aerospace had a 0-0 tariff back and forth, EU and India, and it has been a beneficiary from beginning itself. And the consumer side, especially in the toys, there is a tariff of about 5% in some of the products. And obviously, although we don't directly bear any of the tariff, it should make India more competitive against other geographies, and that should help our customers to pick up more from India. And we see that opportunity there.
All right, so there's a bit of a tailwind, but not a very large one. Tell us a little bit about the aerospace business. The order book, I think, is around $800 million odd. Any new clients have added? How is traction out there?
Aerospace, pretty much we work with every customer in aerospace. If you really look at it, Airbus, Boeing, be it, and Safran, Collins. And we are actually adding more orders, more wins from the same customers, because we have to go more deeper with this customer. Apart from aerostructures, which is a significant portion of our current business, we are bringing in more work from the landing gears and engine side of it. And those are the ones which are going to have a tailwind for further growth for us in the coming quarters.
All right. And what about, your balance sheet right now? Because post debt raising, or rather post the fundraising after the IPO, you said that your net debt will go to about 100 odd crores. Has that happened? And have we seen the best of finance cost savings already, or there's more to come?
Yeah, it's going to happen. Not in the Q3, it did not happen, because
exactly
the Q4 you will see that unwinding of that happening on the balance sheet leverage because of the IPO proceeds, and that will happen, and that should help us bring some improvement in the profitability automatically.
So on a net basis, you start to repair profit when? By the end of FY26 or the start of FY27?
It'll be more in FY27, because the contribution coming out of the savings on the balance sheet perspective and also our improved utilization should together drive us towards that.
All right. Thanks a lot, Mr. Melligeri. Thank you so much for joining in. Wish you good luck for the fourth quarter and beyond as well, increased utilization and business. But let's